All righty, everybody. Hey, welcome to our Note Nation Top 40 Tour as we roll into the Queen City of Charlotte, North Carolina tonight. Honored to have you guys here. This actually marks we've gone through the first 20 cities. This marks the beginning of the second half of the tour. We're honored to start it off with the Queen City of Charlotte, North Carolina. I've invested in Charlotte and the surrounding area for over about 10 years now. And really looking forward to what I'm going to be sharing with you guys tonight out here, whether you're watching this live on Zoom with us or catching it on Facebook, or catching the replay on YouTube or Facebook as well. We encourage you to ask questions and comment. We'd be glad to answer those questions, those comments, no matter when you ask them, because I think that's one of the most important things is that we pride ourselves on communicating with our audience out there. But once again, guys, if you're joining us for the first time, we've got a whole tour that we're rolling on 40 cities over basically 40 plus days. You can go to notenationtop40.com to keep up to track with what's going on and catch all the replays from all the cities, or always go to weclosenotes.tv to check out all the videos out there as well. But welcome to the Note Nation Tour. We have real estate investors, not only just local to Charlotte, but also all across the country that find Charlotte and North Carolina attractive. We'll be discussing the statistics and the numbers of where the market's at currently. What's going on there, what does the future hold. We'll talk about the second half outlook of 2020 and beyond. We'll also discuss the future opportunities for real estate investors. What do they need to be worried about today and be more worried about also in the next quarter, 6 months and beyond. We'll talk about where to look to find deals, and then we'll also talk about how to get started with what's going on in the market right now to capitalize on the opportunities that are presenting themselves. And I do believe there are opportunities presenting themselves today that we can tap into to really create some win-win scenarios. We'll get to that in just a second. So who is this guy, Scott Carson, that's talking tonight? Well, I'm honored to be here with you guys. I'm honored that you would take time out of your schedule. I promise you to have you out here in less than an hour, just under the hour mark, as well as we go through this information for you tonight. But I've been an active real estate investor since 2002, got over 15 years in the finance and mortgage industry. I bought over $500 million in debt on commercial and residential properties over the last decade. I'm the CEO of weclosenotes.com. That's our main website. You can find out all the different things we have going on there at weclosenotes.com. And then we also, one of the things I pride myself is I've been teaching real estate investors how to capitalize in the market since 2004. Foreclosures, short sales, debt, subject to deals. We've got a lot of experience in doing a lot of creative things. I am the host of the very popular podcast, the Note Closers Show, that you can listen to anywhere that podcasts are at. We're just about over there. Excited that we've got over 30 million listeners across the country as it is nationally syndicated a podcast. And then, like I said, I invest all across the country, not just Charlotte, not just in my hometown, but literally roughly about 30 to 35 major markets. And Austin, Texas is home to me, guys and gals, but I've not bought much here over the last decade. Bought more in North Carolina than I have in a lot of other places. So excited to be focused tonight's call on the Queen City for you guys tonight. And I've got a mission. One of the big missions that drives us here is that we pride ourselves on helping investors to accomplish their dreams and increase their wealth through debt investing. One of the things that we love to do is identify opportunities to be able to discover, purchase, invest, and work out distressed assets at well below market value and turn those into reperforming assets or reperforming notes for our own portfolio and for our investors' portfolio. So we're excited about that. That's our big mission out there. And just so you guys are curious, I've had people reach out to me and say, why are you doing this? Seems like you're doing a lot of work here, 40 cities. Why are you doing this out there? And I'm like, well, because I really do love to help investors. I've been, like I said, an active real estate investor since 2002, full-time really since 2004. And I really love to help investors find opportunities, not only in their backyard, but in other cities across the country. I love to help people solve problems. One of my 5 love languages, I'm a problem solver. And I think there's a lot of investors out there that are trying to figure out what the heck is going on in the market right now. And every city, every state's doing something different for the most part and trying to find opportunities, whether it is in their backyard or they need to look across the border. I do believe that what's going on right now with this whole crazy meltdown, everything that's going on, is an opportunity that will come across basically once or twice in your lifetime. For me, it came earlier on 12 years ago with the Great Recession. I took opportunity of that. Done well, and I look forward to what this recession is going to bring to the table as well too out there as I go through the numbers and opportunities. I'm also passionate about helping people because I was once a distressed borrower back in 2002, 2003, where I was facing foreclosure, being laid off, and trying to figure things out for myself. So there's a lot of people out there struggling, and I want to try to help people help those individuals out there. And I empathize with borrowers that have been laid off or struggling to make their mortgage payment. Like I said, I've been there, got the t-shirt and the scars, but more importantly, the experience and understanding the opportunities that are available to everybody out there. And I am so passionate about that. I believe that there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was impossible. Whether A, you've been laid off or struggling right now, there's opportunities for you to overcome and great opportunities for you that once you overcome a couple of these obstacles, you can get rocking and rolling and do some good things. It's also a lot of people out there are struggling right now, 4 million plus borrowers in default, that their dream of home ownership is now a nightmare. And we like to talk about how to overcome that, help those individuals out there. But I also believe that there's so much opportunity that I've set a big goal for myself to help 1,000 investors in the next 12 months dive into the markets and make purchases that make sense, great investments for themselves. I've set a challenge for myself to do that in the next 12 months. And at the end, I invite you to be a part of that. So let's dive into where are the opportunities at? Well, everywhere. I'm a firm believer on this, that there are deals everywhere you look. You just got to know where to look and really primarily look where other people aren't at. And I don't care if you're looking at self-storage units or multifamily, two of the biggest, hottest asset classes, or you're used to dealing with single-family homes, or you want to get into mobile home parks, or you're excited about some of the office space, the commercial spots, or you're looking at hotels that are in default right now. There are opportunities everywhere. And the beautiful thing, ladies and gentlemen, what's going on right now is not dependent on your credit score. It's not dependent on how old you are, how young you are, what color of your skin is, whether you're a business owner, you've been successful, or you failed in the past, or you've been through a foreclosure, or you're in forbearance right now. It means nothing. It means nothing. And if you take the opportunities that are presenting yourself and do something in the next 90 to 120 days, you can really set yourself up for the long run. And I don't care whatever it is, whatever your goal is, this can help you accomplish it if you start implementing the things that we'll talk about tonight. Start looking at some of the asset classes that we're talking about and the opportunities that are persisting just about in every market across the country, okay? And whatever your goal is, whether it's maybe to retire yourself on the beach drinking margaritas and pina coladas, that's a great goal. Whatever it is, beautiful. If you want to retire your spouse, that's a beautiful thing. If you want to put your kids through college, great. There's opportunities. If you want to basically retire your parents, there's nothing wrong with that. Maybe you want to travel more as a family or an individual. Or maybe you just want to buy a bigger house and some more toys for yourself. Whatever your goal is, we know two things. One, it is possible because there are opportunities out there to do that. But second thing, it's going to take some cash to make this all happen. It's going to take some money to make something happen. And if you were sitting there like, well, Scott, I don't have a lot of capital, that's okay. That is okay. What we're going to be talking about later, you don't need to have cash of your own. You're not going to need credit to tap into these opportunities. There's some great things out there, and the banks are willing to play ball with a lot of people to get stuff off their books, and we'll dive into that. But first of all, let's talk about what the national numbers say. First off, there's 11.1% unemployment rate. That was June's numbers. July's aren't in. We probably will foresee that going down a little bit in some states, but then going up in others. We'll also see as the PPP money runs out, numbers will start to spike. And as companies and businesses go out of business and been hanging around, it'll be interesting to see what the numbers come out here in the next week. Currently, there are 40 million people collecting unemployment. That number will probably go up or it may go down in different states. I think it's going to stay about the same, if not bump up a little bit on a national average. It's going to vary state to state and what kind of closure ratios that you're in, or whether your city's gone to a level 3, you're still at a level 2. We know Charlotte's at level 2 right now. That'll be interesting to see. We expect 52% of small businesses are expected to fail and not return. That number we probably will see climb as it gets harder and harder for businesses to stay open and operate at partial capacities a lot of times. I was just in the Charlotte market this past weekend. Actually flew out there and flew back. Flew in Thursday morning, flew back Friday night, in the hotel we stayed at had been closed for 2 months straight. They laid off their entire staff except the management and one valet. You know, they're lucky to still be open, but they're still struggling like so many other small businesses out there on a regular basis. 10% of homeowners were already struggling prior to COVID kicking in. That's what most people don't realize. 1 out of 10 borrowers in America was already 30 days behind before this all happened. Now, you look at things, we're currently at a 7.76% national mortgage delinquency rate. What does that mean? That means at least 1 out of 12 borrowers, 1 out of 13 borrowers is at least 90 days or further in default. And that number is going to, I think, going to climb up actually a little bit. As this thing goes on, as the banks continue to kick the can down, it is a nice thing that the banks, government secured banks or mortgages are being delayed for 6 months, but we're going to see that delinquency rate climb. We're going to see, I think, closer to 9 or 10% when July's numbers come out. There are currently 4.1 million Americans currently in default. Out of that 7.76%, that makes it 4.1. We are going to see that number probably double, get close to double over the next 60 to 90 days as well, because there's another 4 million borrowers out there that are under that 90-day period that are going to roll into that 90-plus day period. The numbers don't lie from what I see happening in the banks, and nobody's talking about that right now. What's going to happen? Are we going to see a future meltdown like we did 12 years ago? I don't know. We're going to see a lot of trouble, though. Okay? And if you think about what happened over a decade ago, it took us 18 months when everything hit the fan back in 2008 to hit 1.6 million defaults. Okay? It took us 18 months. It was basically in the middle of 2010 or into 2009 before we hit that 1.6 million defaults. We've already surpassed that number in less than 6 months, 2.5 times that number in default, okay, in 3 times faster. So there's going to be, and that's just talking on the single family side. That's not talking on the commercial side of things, which is being hit even harder. And that's the really what's not a lot of people aren't talking about. We know delinquencies are evenly hitting every type of loan type, whether it's a subprime, a non-prime is what they call it now. I saw a big increase. Prime loans, reperforming loans, whole prime delinquencies all went up at 5 to 20% across the board. Lenders are bracing for us up to see up to 15 million mortgage defaults across the country. And back 10 years ago, that's where we peaked at. 15 million homeowners were in default at 2010 as the worst aspect of it. They're bracing for us to hit that number. Do I think we'll hit 15? Probably not, because I don't think it would take a lot for things to happen. But if we continue to stay shut down, if we continue to see markets that, oh, we're going to tighten back up again, it very well could be that point. You know, if I had a glass ball, I'd be in Vegas right now with a few open casinos versus here with you guys tonight. But anyway, talking about what's going on in North Carolina, Black Knight comes out with a housing hardship ratios of looking at unemployment rate, delinquency, and ranking them. And North Carolina ranks very, low, 34% worse off compared to everything. Unemployment is below the national number at 7.6% across the board. Delinquency is a little bit below the national average at 7.14% of homeowners. So that's not a bad thing. I mean, Charlotte and other areas are actually doing better than some other areas out there compared to different things. But when you look at the different industries, some things are happening out there. Now, looking at unemployment, okay, unemployment rate spiked in May at 13.2%. And then it dropped in June dramatically, roughly about a 33% drop to 8.4%. Now, we think it'll stay pretty close to that, maybe get into the 7s when July's numbers come out. But that's for the Charlotte, Concord, Gastonia area. If you look at on an average basis here for you, so you can kind of see the United States unemployment rate, 11.2, Charlotte's at 8.4, Gaston County is 8.5, Mecklenburg County, 8.6, Union County is below that at 6.3, York County is at 9.6. So weighted average across the board there for the most part, you can kind of see where everything is at. You have some peaks and valleys, and others doing a little bit well there for you. Okay. Not so bad compared to the rest of the country. Obviously, I think it's a good thing. Looking at the foreclosure trends right now from Realty Track, you really have, what's great, Charlotte is only 1 out of every 12,500 homes in foreclosure. That's really good compared to others. The worst zip codes are 28215, 1 in every 5,500 homes, and then 28213 is 1 in every basically 8,400 homes. That's really good compared to others out there. But you can see there's those that are hit heavier than those that are hit very little out there. Okay. Basically from one on the most, some of these counties is basically 1 in every 30,000 homes. So that's the beautiful thing about Charlotte as a whole is done pretty well out there. And looking at the pre-foreclosures versus the auction homes, you can see it's down in the June numbers compared to May. Auctions are down year over year. You can see the big spike of pre-foreclosures dropped off in March. Obviously, when everything stopped for the most part, and it's been very, very low level of number of homes, new filings, because they just can't file right now. You see a lot of borrowers out there that are in government-backed loans that are basically just sitting there waiting. They've got 6 months, and Fannie and Freddie are probably willing to boot it another 6 months, kick the can down the road for a little bit longer there as well. So you can see the numbers kind of dropping there. But getting into with what Black Knight does, this is a company that looks at and tracks a lot of the data. And over the last 2 months, we've seen a huge spike in delinquencies. We know that, and you're seeing that increase. People have been paying their mortgage on time, great. But there's others out there that can't pay their mortgage, okay? We've seen an increase month over month of 20%. You're gonna see 4.1 million homes, basically, or at least they're 30 more days past due, but not in foreclosure yet. Yeah, they're not in foreclosure because you can't file foreclosure yet, everybody. Now, looking at what's taking place across the country, this is kind of a heat map talking about what's going on. You see North Carolina's in the light green. It means there's current local moratoriums for the most part. I'm sorry, state where evictions have resumed. My apology. Yeah, it's got dark green, statewide moratoriums, the tan where nothing's been done. North Carolina's in that lighter green states where evictions have resumed. And this is something relatively recently. The moratorium on evictions and foreclosures expired June 20th. So just over a month ago, about a month and a half ago. They're getting, you got to know what to say. Evictions have resumed in Mecklenburg County. What to know if you can't pay rent. Now, the thing is, if you live in Charlotte, if you're renting in Charlotte and your landlord has a government-backed loan, then you can't be evicted. You can utilize that national eviction delay. Hey, yes, if your landlord, like I said, has a Fannie, Freddie, FHA loan originally on that stuff, and they've been delayed, then you're not going to get evicted. You can go to a specific website there. I thought I had it there. I must have cut it off by accident. But you can go and take a look at that. I can pull that up there for you as well. But you can see that North Carolina is roughly getting back to normal. 7% of where they were at before in the foreclosures and evictions are starting back up. So you keep that in mind. You can't be living for free if you're not doing something. If you're not going to be working of some sort. Now, there are opportunities out there. There's unemployment. Obviously, Charlotte actually has put together a rental bailout fund, over $10 million for tenants and homeowners are facing evictions and foreclosures. That's something you may want to take a look at if you're living in the Charlotte area. We all know there's been talk about the dominoes falling as household incomes decline, job losses. We're going to see a wave of foreclosures, but when is it going to happen? Now, it's not going to be anything immediate, all right, because of the delays, the foreclosures being delayed on the government-backed loans or the forbearance agreements being pushed out. You have to take a look at what's the type of loan types out there that are affecting everything. Now, if you look here, this is a chart from late June talking about the different loan types. Now, the FHA loans are roughly 10% default rates. Your VA loans at 4.65. Most of your traditional loans are at 3.16, and all the rest are at 3.16 for your conventional, 4.36 for all the other loans. Now, on average, you're going to see that number continuing to increase. Now, why is the green so high? Well, your FHA loans are often your first-time borrowers, first-time homeowners that get into a budget mindset. They often, especially over the last 12, 24 months, a lot of banks have been willing to give that 3.5% down payment that's required with FHA loans. You've got homeowners moving into a property, first-time home buyers, especially in the Charlotte area. It's the $150,000 value of homes or less that are seeing the biggest difficulties. Those are the first-time home buyers that are struggling. They've been laid off of work or the business is shut down. And those are the ones that we're seeing an increase across the country, not just in Charlotte as well up there. Now, while a lot of people are filing forbearance agreements, roughly you see an increase or a decrease from week in, week out. Immediately, there was a lot of forbearance agreements filed, and that number is inched up. It's kind of slowed down and slowing week over week. Currently, there's still about 4.7 million homeowners in forbearance plans. What you also have to realize, economists and the Mortgage Bankers Association believes that there's another 4 million people out there who haven't filed forbearance that should have filed forbearance agreements, but they just have not picked up the bank And that wave has not hit yet, or it's in the process of hitting. That now that we're beyond, where are we? We're in August now. That's the 8th month. We started this in March. So we're basically right at about 5 months into this thing. It's going to get a little bit worse. So good news or bad news? Well, that's for you to decide, depending on what side of the coin that you're on. Now, the beautiful thing is North Carolina has lower default rates versus the national average. That's a good thing. You have shorter foreclosure timeframes in North Carolina. We know that. You foreclose pretty relatively quickly in North Carolina. The one weird thing is the ability for bidders to come back and counter the foreclosure bids. It's weird, one of the weirdest foreclosure systems in the country. You can foreclose relatively quickly, but with this alternative bids and coming back and countering back and forth is crazy. But if you're a FHA borrower, North Carolina does have a non-judicial foreclosure, but still, an FHA borrower can basically drag this thing out to 420 days for foreclosure, over a year. That's why I believe not only that, but the amount of forbearance agreements and other government-backed loans, it's going to drag this out 6 to 12 months before you see anything, okay? And you look at all those forbearance agreements, doesn't mean anything's going to happen this year or even really into all of next year on the government-insured loans, okay? It's going to be a while before foreclosures actually hit the open market. If you're a real estate investor looking for pick up a property at the foreclosure auction like it was back in 2010-11, you're going to have to wait around a while, no offense. Because you're going to see some, but most people aren't willing. A lot of the borrowers out there are willing to work with the homeowners. If somebody's got 6 months or 12 months to try to get back on their feet, or they're in a forbearance agreement, hey, that's an opportunity for somebody, especially the banks wise, to say, okay, we're going to give you a little bit of while. Yes, you can just add 6 months or 12 months to the loan term. You may not see some of the stuff. But also, we all know that people, you give borrowers an inch, often they will take them out. You give tenants an inch, they'll often take them out. I've talked to some banks that they know some of their borrowers are back to work or were never laid off, and they've asked for forbearance agreement just because they can. Right now, that's the residential side. It's going to be a while before you really see the bloodbath there. The real bloodbath is going to be in the commercial debt space. Okay, totally is. We're seeing, obviously, for rent signs, vacant signs, businesses are going out of business at a record pace. We expect, like I said, another 20-30% of small businesses to go out of business or not even recover at all, is what some of the talk is. So that's the thing you've got to keep an eye on, everybody, is A, what are the opportunities out there? When there's blood in the water, that's the one to dive in. We all know that there are a lot of commercial buildings, commercial opportunities been big, been going up in a while, but it had to correct at some point. I've been saying this for 12 plus months. Hey, it's got to turn, it's got to come down at some point. And sure enough, the commercial boom has ended. Now, Charlotte's been hit by this like by anybody else. Now, looking at where the rest of the country is and on averages across the board, we all know that hotels and lodging are taking it really difficult. Over 27% default rate over the last 90 days. You look at retail, has always been on life support for the last 2 to 3 years. That number is actually low compared to what a lot of other funds are telling me. That's closer to 20%. We all know restaurants and retail space, the vacancy factor on those things are going to be at 15 to 20% alone before year end. It's getting different out there. Now, if looking at some of the different areas of delinquent balance in there, Charlotte's not in the top 15 markets, but you look at a comparable market like, say, Atlanta, maybe Cleveland, you're going to see probably somewhere in that $500 to $1 billion in distressed debt in the Charlotte market because of who's there, who are the lenders out there, who are some of the bigger companies that are struggling out there. The big thing that is affecting is obviously the area commercial properties. There's a bunch of them have doubled. They're basically on the watch list for what's in default out there. Now, hotels, we talked about this. Plead for a second stimulus. Charlotte stares down $1.39 billion in likely loan defaults. Okay, not just on the hotels, but that's also on other things in the Charlotte market. Office space, restaurants, mixed use, big box stores, all struggling out there. It's just not the hotels, but the hotels are leading the way. You look at a company like Great Wolf Lodge, including the Concord location, is joining the number of hotels under cash pressure from pandemic. And the thing about Great Wolf Lodge is they're not financed individually. They're financed as a whole, okay? Great Wolf Lodge is a $1.7 billion loan over 17 locations. Okay. Ouch. All right. Think about that. 17 locations, and they're all underwater, basically. It could really create a lot of difficulty because people aren't traveling, people aren't staying in hotels. It could get really ugly out there, everybody. Okay. Oh, Great Wolf Lodge. Anyway, let's talk about some more of the commercial default numbers out there. Like we said, 1 in 4 hotel loans are in default. That's no surprise. 1 in 4 retail loans are roughly in default as well. Office vacancy, we talked about this, 20%. Expect another 15% vacancy for retail and restaurant space. Commercial rents are going down by another 10% or more by year end. Okay. They're expecting that to be another 5 or 10% moving into 2021 as well. It's just going to be ugly for a while. Now, somebody's probably asked me, like, well, why the heck would I want to look at this stuff right now? Because of the fact that you can often pick this stuff up at substantial, huge discounts. And if you know that, hey, okay, market rent says $1,000 a month. Well, my numbers need to reflect an $800 a month instead of $1,000. Roughly, you need to be at 80 cents on the dollar of where it was today. But that also reduces the values down dramatically on a commercial basis because cap rates are based off of cash flow. If you're getting 10 to 20% less, your values drop 10 to 20% just off the top there. That leads to opportunities in a couple of ways. If you like hotels, great. Hotels are one of the biggest assets if you know what to do with it. Now, the Bellagio, you're not going to pick it up, but there are plenty of other smaller hotels, chains, flagged hotels that are opportunities for you guys to go and do some things. Now, all across the board, the CMBS market has really taken a hit. Going back to March, they lost $50 billion overnight. These are the big Wall Street guys that have been financing a lot of this stuff over the last decade. They financed a big chunk of the commercial stuff 12 years ago. Well, these days, it's just not the big guys. You have a lot of the stuff being financed. Over 50% of the current distressed loans are financed by banks, by your traditional banks, not just the CMBS guys, okay? Now, a bank, if you don't know this, on a commercial property, they're not going to finance 97% like an FHA loan or 90 cents on the dollar, conventional loan in some cases. They're going to finance a little bit, obviously differently. They're going to want to see some skin in the game, but they're still going to finance it roughly somewhere between 60 to 70% on loan to values, okay? So you got $1 million property, $1 million loan, the bank finances that at 70 cents on the dollar, roughly 690, 700,000. Because they don't want to go above that 70% LTV. Well, when you have values drop, rent rates drop, that means your cap rates drop, that means the values drop. That means the banks now are over encumbered where they want to be. They may now be at 80% LTV or 90% LTV. They don't want to be in that position. And you know what they're going to do? They're going to go to the operators, they're going to go to the borrowers and say, hey, I need you to bring 10% or 20% cash to write down this loan immediately. And most people don't have that. And so then what's going to happen, you may have an asset that the borrower wants to stay in, maybe slightly performing, but it's not following that aspect of it. So then it goes into default and the banks can look to sell that stuff off. Huge discounts on that stuff, okay? What's the play on that stuff is basically finding the banks that have this stuff and coming in with cash, taking over the loan, becoming the bank. But buying that stuff at a discount gives you a lot of flexibility to work with the existing borrowers, to work with the existing companies that are in place there on longer term rents, or working with the borrower, you know, the landlord, to work with them to make it a win-win across the board there. So that's a lot of opportunities out there. Now, things are lurching up higher. Every asset class is seeing an increase across the board. Banks stand to lose roughly $50 billion at least on commercial real estate loans. The largest U.S. banks expect to lose that much, okay? Now, you talk about Bank of America, obviously based out of Charlotte. Bank of America is setting aside billions of dollars for salaried loans, and they just announced this the other day. If you saw their shares drop, roughly about 3 weeks ago, they came out and announced that they expect to lose roughly a $5.1 billion loss on salaried loans. That's the first estimate, okay? Now you look at all the companies like Wells Fargo, American Express, Citibank, and Chase. They've also taken it in the short hairs. They're getting hit. There's a lot of billions in commercial and residential real estate out there that's struggling. I'll bring up the numbers on Bank of America here in just a second, where they're at too. But the thing you guys keep in mind is where are the opportunities in this aspect of stuff? Well, the biggest opportunities isn't going to be in the foreclosure market REO space. If you did that, you might as well wait for 12 to 24 months for something that may never show up. Is it in the fix and flip space as a real estate investor? No, because the hard money lenders have pulled their lending back. They're starting to require it to be a lot stricter. I would not want to be in a fix and flip space right now. I get a lot of phone calls from fix and flip or hard money lenders looking for me to buy their debt right now. I'm like, I'll take it at a discount. Oh, no, we're at 70%. We're not going to take a discount. Like, well, guess what? You're going to end up holding it longer than you should, right? Rentals. I don't think I want to be in the rental, especially the landlord business right now with everything being as chaotic as it is, okay? The real opportunities really lie in the debt game, everybody. That's where it lies, in buying the debt, being in the big short, basically, coming in, taking over this debt and buying it at huge discounts to work with it. Now, the banks, while you may not see foreclosures for another 12 to 18 months, you're going to start seeing banks selling residential notes off in the fourth quarter. Why the fourth quarter? Because they've had 6 months. The government's basically given them 6 months to review the portfolio and see who's been paying, who's not been paying, who's been naughty and who's been nice, okay? And the naughty list are the ones they're going to sell off. They're going to sell it off and let somebody else deal with that issues in 2021 because they want their numbers to look good rolling into the next year, okay? So you're going to see a lot, especially the non-government-backed loans. They're going to be looking to move some of that stuff off in the fourth quarter and let somebody else deal with the foreclosure process. They don't want to be the bad guys. Let somebody else deal with it. Now, commercial notes, you're already starting to see them this quarter. I've already had a lot of conversations. Every day I end up getting emails from other people out there, communications on. I was talking with a hedge fund guy out of LA, another one out of New York a couple of days ago, that they're already seeing a tremendous amount of stuff hitting their books, coming across their desk, more than they saw over the last basically year to year and a half and what they've seen on their books right now. When you talk about a hotel in New York City, $260 million loan being sold at roughly less than 20 cents on the dollar, that should tell you something. When you see office space really getting hit hard and people looking to sublet on a regular basis or big companies moving out. I mean, there's been announcements by companies that are expecting to work remotely at least through all of next year or at least June of next year. That tells you something. You got some opportunities. Now, what can you do with that stuff? You got to get a little bit creative. Be creative like this guy here in Illinois. Basically took a hotel that was basically vacant, saw what was going on, made a pivot play in March and turned his hotel from a hotel into bedroom apartments, okay? Sold the property off, got out of it, but also made a killing on it because there was a need for apartments across the board there for you. Our buddy Garrison Gilbert is doing this in Gettysburg, Pennsylvania, looking at smaller hotels and converting them into apartments because there's a lot of need for apartments and multifamily across the board. We know that. Affordable housing, there's a big need for that. And if you can find something and convert it relatively inexpensive and put people in there, hey, that's a win-win. Office space-wise, you'd be like this guy in Denver, took 170-unit office space, downtown Denver, and converted it to self-storage because nobody was moving into it. Completely rehabbed this property, 10 by 10 offices, and then opened up basically right as COVID was going up. Of course, not going to happen with leases. People aren't working, so he did the smart thing, converted it to self-storage facility, which there's a huge need for that. A brilliant play on this. We're really looking forward to seeing this asset a little bit more. So we've actually, this is something that I've got the broker that I deal with in that area taking a look at it for me. And the price on it is ridiculous. Compared to what I would think of for downtown office space in a variety of ways, okay? You got to get creative. Now, what is everybody telling me? Look, the big boys are still going to be the big boys with the big deals. They're looking at the 5 million or plus bigger assets. The biggest opportunity is going to be in your smaller played commercial property, smaller valued at 2.5 million or less, because that's where the banks get excited. As an ex-banker, that's one of the great things that the banks love doing. They like to finance that commercial space, $1 million to 2.5 million, because they could be competitive that way. They couldn't really go against the cheap money from the Fed and other things these big guys are getting, but they do in that smaller space. And that's what's clogging up their books in a variety of fashions all across the country, not just in Charlotte and North Carolina, but all across the country. And as I said, banks have financed this stuff, not just Bank of America, it's not just the Chases. A lot of your smaller community banks are struggling with this stuff on their books, and it's going to get worse out there in a bloodbath, and nobody is talking about that. So let's talk about some of the banks that are in trouble. Now, we track this on a quarterly basis. Banks filed quarterly reports with the FDIC, and there's a company that we use called Bauer Financial, and they will track and evaluate banks and credit unions on a quarterly basis based on what they, what they submit in their FDIC reports. Now, Most recent one came out in June. So it's, about a month and a half old. The next one will come out next month in September. And you look at there, literally, I like to evaluate banks that have at least 5 branches or more, and that's over 2,000 institutions across the country. When you filter it down to just those that are basically based in specific states, North Carolina has 20 banks that are just based in North Carolina. Now, we all know there's more than 20 banks in North Carolina lending. That's a no-brainer. There's thousands of banks all across North Carolina. If you just take a snapshot of those that call North Carolina home, out of the 20, there's a lot of numbers behind it. Those 20 have a combined $9.4 billion, $9.4 billion in 90-plus day defaults right now, okay? You average that across the board, it's roughly about 4% per bank, okay? That's the weighted average across the board. The biggest, obviously, contributor to that number is the Bank of America, evil empire, as people like to say. But Bank of America for years has been the bell cow of the traditional banking. You have Chase, Citi, Bank of America, okay? But Bank of America, on its own, on what they filed in June, they've got $6.4 billion in loans that are 90-plus days defaulted right now, and that a secondary wave of $5.2 billion that are 30 to 90 days in default. That's across their whole portfolio. That's what I'm saying. You got almost $12 billion from Bank of America alone out there that's coming due. Now, are you going to buy a one-off note from Bank of America on a single-family home? No, you're not. But you could buy some commercial debt from them because they often have different asset managers across the country handling the commercial space. Now, Truist Bank, which is the parent company of BB&T, you may be familiar with them, not quite as big, but half the size of Bank of America, has $2.7 billion in 90-day defaults. And they have an additional $2.1 billion in 30 to 89-day defaults, which a big chunk of that now has passed over the last 60 days that has rolled into that 90-plus day default. So it'll be interesting to see what the new reports come out, how bloody it's going to be out there. That's just 2 banks, everybody, okay? That's just 2 banks that make up that. There is still a tremendous amount of stuff in smaller banks all across North Carolina, all across Charlotte, that have stuff on their books that they need to get rid of, okay? Those are just the 2 biggest things. So why would you want to buy this distressed debt? We've talked about it briefly. You start buying this debt now versus waiting around for the REOs to show up in 12 to 24 months. You got to start doing something now. I know investors out there are looking for opportunities, and it gets very competitive on the fix and flip, the REO market. A lot of places out there is just way overpriced. But the debt side of the game, you can start buying this debt at significant discounts, and depend on the location where it's at, the foreclosure time frame, the asset class, the values, the condition it's in, pick it up at a really big discount. We're talking 30 to 70% off. Big high-end hotels are going at 20 cents on the dollars or less. Hey, guess what? You're going to see that on the lower end side of things. And you can buy the debt and step into the controlling entity, the controlling manager of a lot of this stuff. You can either take it over and offer a balloon reinstatements or modifications, short sales, short payoffs, foreclosures, loan sales, deed and loans, cash or keys. The fact that if you pick up something at 50 or 60 cents of what it is, what's owed, you're still well below the at market value right now. If you wait around a little bit, hey, you may end up getting even cheaper on a variety of different assets. Take over the note, turn it into a cash flow performing note, or if you want to, take it over and manage the property. Do what you want to do, re-gentrify it. Pivot the asset from, say, a hotel into an apartment complex, from an office space into self-storage, okay? From a physical restaurant location into a to-go location. There's a whole variety of things that you can do if you know that market. And that's the thing about local investors. You guys have a bigger and a better grip on your local community than the bankers across the country. They don't know what's going on with that asset a lot of times. They know the payment history, but they don't often know what's going on in that local community. And that's the thing about buying debt as an investor like you and me. We have a lot of the flexibility to be able to pivot, to get creative with the borrower, to understand what's really going on and having a true view of the property versus just looking at a spreadsheet. Now, some other advantages of investing. So many investors out there that get started in real estate investing are often on limited budgets. I know many people are. And most of your traditional others, you've got to send out a tremendous amount of direct mail, bandit signs, yellow letters, go get door knocking and get shot at. In the debt game, we aren't sending postcards out to asset managers or banks. Nobody would get those. We have zero direct mail costs when it comes to finding deals. All right. We don't do that stuff. We reach out to the banks directly so that if you can send an email, if you can jump on LinkedIn and track some asset managers down, or pick up the phone and start dialing for dollars off some of the lists that we are able to show you how to find, you can find sources that are going to feed you on a regular basis, not sending out 5,000 postcards to get a 1 to 4% response rate for one property from the borrower. We're talking about a bank that has billions, if not millions, and if not billions of assets they're looking to move that you get on a quarterly basis, okay? One source can feed you on a regular basis for years. Okay, I've got banks that I've been talking to for over 10 years that send me their lists on a quarterly basis. Now, the beautiful thing, I can cherry pick it for the best deals from my own portfolio, or say, no, I don't want to buy them. You don't have anything that makes sense this quarter, or follow back up in another 30 days and see if they've gotten cheaper on the price, which they often will. But if I can buy in bulk, I even get better pricing on the stuff that's going on. All right. That's the thing you got to keep in mind, everybody. When you buy the bank, you buy the note, you become the bank, you have all the rights to do it, but you can buy this stuff on residential commercial assets at significant discounts because you're taking on the bank's problems. And the longer the foreclosure process takes, the bigger the discount. The more difficulty going on in those markets, the bigger the discount. And if you don't, like I said before, you don't have to have credit. The bank doesn't care what your credit scores look like. They don't give a rat's ass. All they want to know is that you can perform by taking down the asset and running with it. If you don't have the capital to shift, guess what? There's millions and millions of investors out there with capital looking to fund deals to put their capital to work for a period of time. And that's the thing, everybody. If you think back to 2010, 15 million homeowners underwater, roughly about 4 million properties on the commercial side that were in default or heavily hit hard. How big a piece of that pie, how big of a crumb do you need to change your whole outlook financially? How many deals do you need to do? How many sources do you need? Not many. If they continue to feed you and you can buy stuff at a discount, this is a once in a lifetime opportunity for those that are willing to take action. Unfortunately, only about 5 to 10% of people will actually do anything. Most people will sit around and wait, and they'll get into, oh, now I can buy it. When everybody's doing it, it's not the easiest thing. When you make the most amount of money is when you walk in the opposite direction. As Warren Buffett says, when everybody's buying, you need to be selling. When everybody's selling, you need to be buying. We all know the opportunities of buying at a discount. And right now, the United States is on sale. And it's basically that backroom, quiet sale that you have to know where to go to find it. It's not out in the public, but it's on sale right now, everybody. And there are investors out there. There are a lot of investors out there. If you just talk about what's going on in Charlotte, there's a tremendous amount of wealth out there waiting to be deployed. There's over $9 trillion in retirement funds across the country right now. And in Charlotte, when you look at how many investors out there, there are 31,000 investors that have an IRA of some sort in Mecklenburg County, in the Charlotte area just alone. 31,000. Out of that 31,000, roughly about 2/3 of them have at least 150 grand or more in their accounts, making 0 to 4%. Yes, we can track that stuff. All right. 21,000 investors with 150 grand or more. How many investors do you need to talk to work with you, to put some deals together? Okay, not many. Now, maybe if you don't want to raise capital, that's fine to raise capital. There's 30,000 other investors in Charlotte that call themselves and file their taxes as real estate investors that you can flip the deal to. If you don't want to raise capital, don't raise capital. If you just want to flip it, just flip it. I think the value's in actually taking the deal down in yourself. But you can make great money wholesaling deals. That's what I did. Started off with in 2008. I flipped to small hotels, small apartments. Flipped it. I just went and found investors. The banks gave me time, 30, 60, 90 days for due diligence and work stuff out. That gave me plenty of time to find buyers of specific assets, okay? And here's the thing, everybody. Do you want to be the banker or the borrower? Many of you are the borrowers in a lot of situations right now where you're like, I got to pay. I don't have the money to pay. We've all been there. There's nothing wrong with that. If you're struggling right now, my heart goes out and I empathize with you. I've been there before. Look, it doesn't mean you're a bad person. But everybody's already in the paper game. Everybody's already in the note business. You're just unfortunately paying out to your credit cards, your car, your mortgage, medical bills, student loan debts, whatever it is you're paying out. I think you'd rather have it come into you. Okay? And that's why the bank always wins. The bank always gets paid first. And the closer you are as a real estate investor to the money, to the financing, to when it originates, the better the deals are, the clearer the deals are, and the more you have to choose from. I see deals that most investors, traditional investors, will never see for 6, 12, or 24 months because I buy the debt and I take over the asset. And we all know foreclosures affect markets dramatically when it gets down there. By the time a house goes to foreclosure, it not only affects the borrower, it reduces the value of the properties around that house, on that block, in that housing complex or whatever, you know, to the zip code, to the city, and to the state and the nation. It's a ripple effect of damage out there. But when we step in and buy the debt, we try to avoid it. We don't want to foreclose. We want to try to keep the borrowers in their houses or their commercial properties as best we can, because we actually make more money by doing that. We get a higher return on our time and return on investment out there than anybody's. That's why the banks are the biggest companies out there. They understand the arbitrage. They are in the lending business. They're not in the fix and flip business. They're not in the foreclosure business. They're not in the short-term Airbnb business. They're in the money business. And that's why the pen is always mightier than a hammer out there, everybody. So how do you tap into this tsunami of debt that's already starting to hit ourselves? Now we got to kind of understand what's going on there. I've been teaching real estate investors how to tap into debt and buy notes since 2010, over 10 years of experience. I've bought and helped so many, over thousands of investors actually purchase their first non-performing note or their first notes that we're looking for performing or non-performing. I'm very, very proud of that fact that we have helped teach a lot of people how to do this business. It's still a very small niche compared to everything else out there. And like I said, whether it's residential commercial notes, now's the time to be honing your skills to dive into it. I bought a lot of commercial debt when I first started. It turned into residential debt we bought a lot of. Same thing. I'm looking at both these days, everybody, all across the country. In a lot of different asset classes, there's a lot of expertise and a lot of people that when I take down debt, I can put it in capable hands to manage that asset if we need to, okay? Whether I'm looking for cash flow or I want to build asset growth, whatever your goals are, you can do. Cash flow, or you want to add more assets to your bottom line, totally great to do, okay? And you can buy one-offs or in bulk. It's up to you. Whatever your flavor is, how much money you raise, how much money you have. There is no limit to what you can do. Now we see a lot of trades that have started off as almost 25 grand. And we've done trades up to 5 million, anywhere from that one-off asset for $7 that I flipped for 5 grand the next day, all the way up to the 3 prime time beachfront condos that we picked up at a discount and flipped for 100 grand. I mean, sorry, $1 million, not 100 grand, $1 million. There's no credit. Like I said, banks don't give a rat's ass about what your credit scores or that the money's your own funds. They don't care as long as a wire shows up to take it off their hands. They want you to buy something. And then the conversation is going to be buy everything. It's just be buy something to take it off our hands, okay? And like I said before, if you are coachable, you don't need to put a lot of money into marketing. Email, LinkedIn, and phones is all you roughly need to do the note business these days. So whatever your focus is, I've talked about before, single family homes, apartments, hotels, retail office, self-storage, mobile home parks, deals in all asset classes, you can truly create some win-win scenarios out there, which is a beautiful thing, everybody. Not just for yourself, but for the borrowers out there that are struggling, the salt of the earth, the blue collar, the white collar, the no collar borrowers out there that, hey, they didn't do anything wrong. The market just sucks. Just like this family. Lived in a house for 18 years, took out a new loan to pull a little equity out, and suddenly, boom, he gets sick and the market crashes. Their house is now worth half of what it was when they took out the loan. This borrower was trying to do a loan amount for 4 years when we bought the debt. And I bought the debt at such a great enough price, I was able to modify our loan immediately, reduce 22 years of mortgage payments off of her sale. So she owned her house. He and she owned their house. They raised their 3 kids in roughly about 72 months, 6.5 years. All right. It's a beautiful thing when you can help somebody stay in their house and really do some win. And I made a great ROI on my investment as well for you. I talked about high-end condos out there. Hey, you like the pretty properties versus the smaller ones? Great. There's a lot of this stuff out here that's not financed as residential loans. It's financed as commercial property a lot of times, okay? So the banks are often willing to move some of this stuff up. And this is not government-backed, government-insured loans either. Banks need to move this in a big way, and a lot of the borrowers, the developers, the people that are building the stuff, they want to get it off their books as well too, willing to take a discount and work with you if you can come in and help them out as well. Or maybe you're like the small apartment stuff. That's what I'm saying, everybody, is everybody's been chasing apartments, all the higher end stuff. Okay, that's still get gobbled up. But when apartments rents are dropping, or student housing, like some student housing places are at 60% of occupancy or less, That makes for great opportunities for you to come and pick up some of the stuff at huge discounts, just like this property in San Diego I picked up years ago. Picked up at 50% of value, flipped it, made a nice chunk of cash roughly in 30 days. I didn't have the money to take it down myself, but I found somebody who did, and I got paid for my time. Very nice. About what average of what somebody in Charlotte makes on an average basis on an annual basis. So whatever your focus is, guys, you can do it. And if you want to do it big or do it small, it's totally up to you. Okay. We work with investors of all types who've taken their business and done different things with it. You know, kind of like Gene here. Gene Chandler's out of Elkhart, Indiana. When I met him, he was buying real estate, doing a little bit of stuff here and there based on whatever he had in his account. We spent some time with him, worked with him, and I'm proud to say that Gene now has closed on over 134, 35 non-performing notes for his own portfolio. He's raised over $13 million in private capital doing what we teach him to do, and really made retirement a whole lot different than it was before, where he was just a hot shot driver. You know, he learned a lot from us. It was nice getting a text message from him about 3 weeks ago talking about, hey, Scott, just closing my 135th deal. I've got a fund I've put together now. Life is totally different than when it was before. I mentioned, thank you so much for what you taught me. And we love having stories like that. If you like Laura Blanc here, Laura's was from south of Austin. She just moved to her dream home on the water in Maryland. When we met her, she was like many real estate investors out there, trying to wholesale, probably do some fix and flips, options, whatever she could do to make something happen in a competitive market of Austin, Texas. She found out about the note business, took our training, bought 2 deals in the first 30 days. Fast forward, she closed on at the end of the first year, roughly about 15, 16 deals. Now she's closed on over 100 notes for her own portfolio, with most of it with other people's money. And now she's in the process of closing on a big trade, over 100 assets, over $4 million for her own portfolio. It can be a life-changing deal, and we can be more prouder of what she's done. And we've helped guide her along the way in that deal as well. You'd be like Keith Collins out of Ohio, from a small town outside of Cincinnati. I believe Keith was a mayor of a town out there, done a lot with government, a lot of real estate, built water treatment plants and other things out there. So he's got some good experience, but not really a lot in the note business. And he became a student of ours a couple of years back. And I got an email from him just the other day saying, man, Scott, 2019 was an amazing year. He made 7 figures in 2019 off of the note business from learning and taking what we taught him and applying it to his focus and what he wanted to accomplish. And we get really proud. He's going to make another 7 figures this year. He's licking his chops at what's going on in Ohio and other states across the country as well. Now, all these 3 people, like a lot of people up there, had real estate experience. But if you're brand new, don't know where to begin, don't even own a house, hey, we're glad to help you out with that too, just like Raphael here. Raf, out of San Diego, very competitive market, doesn't own a house. He's like, it's too damn expensive here in San Diego, which I can understand that. But he's also a business owner. He started his own car detail company, had 15 full-time employees, but with COVID, when nobody's driving around, nobody wants to wash their car or pay somebody else to do it when they can do it themselves, he had to let his whole staff go and basically shutting down his business, doesn't foresee it coming back, and is not really worried about that because the fact is he started in the note business. When we met him back in November, brand new, no experience, didn't know really the ins and outs of mortgages. We spent time with him, taught him through our training, and now he's closed on over 5 deals, raised over 100 grand, maybe 150 grand in private capital, and really excited. 2 of the deals he got reperforming that he bought, and they turned out roughly a 20% cash return. 2 other deals he's selling at doubling his money, and the 5th one he's still working on. I actually just communicated with him about 30 minutes before we started to help him with a document that he needed to fix or find on an asset to help sell. Look, guys, it doesn't matter what your experience is, what color your skin is, whether you're guy, gal, whatever in between. You've been through foreclosure, you've been through divorce. I don't care. Welcome to the school of hard knocks. Don't care what college you graduated from or if you have no college. You can do this business just like the thousands of other real estate investors and note investors that we have helped really do some amazing things out there. And I'm known across the country as the note guy. I've helped so many people do some amazing things and take their businesses to a whole different level. And I'd invite you to be a part of that as well. Now, I'm not trying to pitch you on $1,000+ workshop or anything like that. What I've got is a very special 1-day training. It's roughly about 8 hours long. It's on a Saturday, live stream like this, so it's COVID friendly. We call it Note Weekend. And that's where we spend all day Saturday with yours truly, going through the basics of note investing. You know, it's a 1-day, like I said, mini workshop. Runs from basically 9 to at least 3, 9 to 5, 9 to 6 sometimes, depending on how many people we have on asking questions. We do this on a monthly basis. Live on Saturday. The replays are restreamed on Sunday, so if you miss a spot, you can always jump on and catch whatever you missed. If you've got to step away for family or something else going on, hey, don't worry about it. It's there for you. A lot of our students call it the Cliff Notes of note investing. If you really want to dip your feet in the water, you could be new to this, guys. This is a great place for you to start. See if the water's warm, see if you like it, and then dive on deep in with this. Normal price is $99. We've cut that price in half to just $49 for the full day. I'll stay as long as there's questions asked. People, it's just me, nobody else, but I'm literally going through a lot of content. You're not going to learn the note business in just a day, but you can learn the basis of it. Like I said, the Cliff Notes version, and really start getting rock and rolling. Our next class is just in a couple of weeks. We have one, like I said, every other month. If you go to noteweekend.com, you can actually see the itinerary and see what's going on and get signed up there. But what do we cover? Well, the first part of the day, I show you how and where to find the notes, what to say, what not to say when talking to bankers. Literally, you'll walk out with a list of over 2,000 banks and asset managers that you can reach out to and start calling yourself and start reaching out to them. Very helpful, right? We'll talk about how to fund these deals with OPM, other people's money. Raised several, actually I've raised about $20 million in capital over the last 10 years. You can raise millions of dollars relatively easy. We'll show you the good, the bad, and the ugly ways of raising capital and what you do and what you don't want to do. All right. We'll also talk about the different exit strategies because there's a variety of ways to make money. It's not always, hey, I'm just going to foreclose and take the property back. No, there's actually a lot better strategies to make a lot higher return on money, return on time, return on investment, to turn non-performing deals into performing deals relatively quickly. We'll also talk about the different vendors because you don't have to do this all yourself. You should not be doing it all yourself, but there are people out there to help assist you and support you to be able to do deals in different states. They're handling all the calls. You're just basically sitting back like a general manager and telling them what to do, what not to do for your business. And we'll walk you through that. We'll also talk about some of the different loan trading platforms. You can start looking at deals right now, residential and commercial deals for your own portfolio today, not waiting 3 months, 6 months, or a year. We'll show you how to find those and how to tap into those. And we'll cover a lot more. Some on marketing, some on asset protection. There's another additional at least 5 to 6 hours of other videos that we include with this so that you can watch and learn more about vendors and some of the things as well along with that. And I forgot, we do throw in a 20-page manual in there as well with information so you can go back and check it. Like I said, people love it because it is literally the Cliff Notes version of note investing, and it's all just for $49. If you go to noteweekend.com, I would love for you to be a part of it. Be one of the 1,000 people that we're looking to help take their note business to another level. Now, if that's not good enough, I like to throw in some bonuses to sweeten the deal even better. As I said before, first off, we're cutting the cost of the class in half from $99 to $49. We're also then dropping it, including a one-day calling banks training. That's me literally calling asset managers for over 4 hours. You can actually hear me making phone calls. You see who I'm calling. You hear the conversation. You can ask questions live while I'm talking to them or after I get off the phone with the asset managers. You can see who I call. I literally will show you how I structure our spreadsheets and our calling trees to make it worth your while. Okay, you get access to that. That's a live training, fly on the wall training. We'll give you the most recent Bauer financial list. Okay, we'll give you the most recent list that comes out. That alone is roughly around $360 to $400 that we throw in there. 2,000 plus banks with all the ratios. It literally tells you who's got stuff in default and basically what their ratios are and what they have on their books they're looking to get rid of. I also like to schedule a 30-minute phone call with you after to help you get you on the right path, help you spend a little time structuring and helping you accomplish your goals and set you in the right direction. I charge $1,000 for consulting, $1,000 an hour for consulting, so a half hour, that's $500 value. If you want your spouse or existing business partner to attend, that's totally included. Like I said, the replays are included. We have the replays out immediately, not 6 months later, but literally the next day for you. And then, of course, we have an amazing Facebook group of roughly about 900 investors that is a great resource for you to ask questions, to look for vendors, to network with other people, to either help you see deals, review your deals, help you fund your deals, or point you in the right direction. And that's over $1,000 in bonuses in there, guys. That's all included for just the $49. So I'm not making a ton of money on $49, but what I am doing is building an army of people that understand the note business that I can send deals to, that as deals pop up, as I get in on a regular basis, I can identify areas that you're looking for, deals that you're looking to add to your portfolio and forward them to you and make it a true win-win scenario. But free has zero value. So I will not do it for free because less than 5 to 10% of anybody out there takes action. So I want you to have a little bit of investment involved. If at the end of the day, you're like, Scott, this wasn't worth it, I am glad to refund back your 49 and let you go. Okay. Don't have no problems. Don't care. Move on your merry way and best of luck to you. But I'd love for you guys to be a part of the 1,000. Why should you sign up, guys? Look, you can help borrowers and investors do a lot of great things. You can make money helping people solve problems. This is the opportunity to truly build wealth. Okay. It's not a get rich quick scheme. If you got to make money in 30 days, probably not what you need to be doing, but there's an opportunity for you to rebuild wealth. And no, you don't need to put in 40 to 60 hours. If you got 5, 10, 15 hours a week, depending on what your focus is, you really make some things happen. And we all know distressed borrowers, distressed business owners that could use some help. And why not be the person that can help them overcome an obstacle and achieve a goal dream that they thought was once impossible to overcome? I'd love for you guys to be a part of that. Like I said, whatever your goal is, to retire yourself, to travel more your spouse, or to retire your honey, pay for your kids' tuition, to retire your parents, to travel more, or just to add more toys. It all takes money, guys. And in the money business, in the note business, hey, it is one of the most valuable places to make capital out there. That's why the banks are all the biggest, because they're in the note business. So I encourage you guys to sign up at noteweekend.com. That's noteweekend.com. Get signed up. You'll immediately get a link to the Zoom call that we'll have here. If you can't make it, we can always bump you to the next one as well for you. So I want to open up for questions, comments, concerns from anybody that's out there that's watching this right now. So I encourage you guys to take action. Noteweekend.com is a great deal for you guys. And I look forward to seeing you in the next class.